Another sell-off sweeping through the tech sector today. The QQQ ETF suffering its worst daily loss in September. But our next guest says, don't panic. There could be some support ahead. Let's go off the charts with Ari Wald of Oppenheimer. Hey, Ari, what are you looking at?
All right, Melissa, I got good news, bad news. Good news is today's sell-off not overly damaging. I think there is an opportunity ahead. Bad news is it does look like there is some additional near-term selling ahead. I agree that Apple, a bit overextended here, needs to come in more. Guy said 157. I see a gap at 166. Tomato, the point is that looks like there's a little bit more downside, and with that could take down the NASDAQ. So here are the levels I'm watching. If we chart the QQQ, the ETF of the NASDAQ 100, I think the key level is the December low at $179. I'm showing that the 100-day average comes into play there as well. I think we come down, test it, maybe even undercut it. I think the most important point here is we're going to be looking for signs that selling is becoming less bad. One indicator I'm going to be looking at is the VIX. There's a volatility index based on the NASDAQ 100. I think what we want to see here is that the December low, December 3rd, that was the high intensity low is my assumption right now when you had the big spike in the VIX down to up to 34. What we're going to be looking for is a slight undercut, maybe a lower VIX high, which would be a bullish divergence. That's the boom, followed by the whimper. That sets the platform up ahead of what is still an intact uptrend. Final chart, where's opportunity right here, right now? While the NASDAQ market overall continues to digest the prior run-up, we've seen this flight to safety. And in tech land, it's Cisco. Breaking through, in this tough tape, no less, breaking through multi-year resistance dating back to 2019. This is one of the few tech charts that still getting back to its peak levels from the year 2000. I think as long as that breakout holds at around $58, it can make that run, which comes in the $70 range. So I think you buy this breakout in Cisco, Melissa.
Ari, obviously, tech itself is going to pressure the overall S&P 500, but what we saw today was the S&P didn't do too badly considering the steep declines that we saw in technology, implying that there were other sectors that were able to hold up. And I'm wondering what the other parts of the market look like and where the leadership is ex-technology in this environment.
That's right. Our feel, this was more of a shakeout. It was more of a rotational pullback. Tech was the leader. Into the recent highs. It was a sector that did make a new high in November there. And with today's sell-off, you're seeing some really great action in the financial sector holding up well through this, which I think is telling. This is such a big difference between now and Christmas of 2018. We've been getting asked a lot about that comparison, that the Fed-induced sell-off into Christmas. If you look at market conditions now, and then there have been some internal cracks. I'm not saying that this is a great setup internally in the market, but it's a lot stronger than it was at that point. And I think financials is a big reason why. I think the fact that groups like that are holding up well, why we're still probably mid to late cycle, maybe looking for a top in 2022. But nonetheless, I think it does set up for a leg higher here in the new year.
All right, Ari, thanks. Ari Wald. Guy Adami, where would you go?
I love what he's saying. Some of these names, the valuation names, the reasonably valuation names, Cisco. Look at IBM. I mean, we never talk about IBM. That had a decent day today. So I think tech with valuations that make sense in this environment. But I'll throw one other thing in there. I think healthcare is underestimated here. Big cap pharma has been under pressure. But look at Bristol Myers recently getting off the mat. I think that makes sense. And I still think Eli Lilly is tremendous value.
Dan's got a salty head shake that I can't ignore. Dan.
I can't. We're talking about Cisco and IBM. The market's rolling over. These are the two worst performing tech companies. Forget the stocks. Look at the gaps from their Q3 earnings. They were disgusting, and we were in a raging bull market for mega cap stocks. So don't buy the crap when things are rolling over. Give it some time.